Welcome to DebtCircle podcast. Today we are joined by Mr. Manu Prakash, who is the global head of wholesale lending, DCM and FI coverage at Credible, to discuss the growing relevance of trade receivable securitization. We'll explore how this tool is unlocking liquidity for businesses, the evolving investor interest, and what lies ahead for this market. Thank you, Mr. Manu, for joining us. It's a pleasure to have you here. Let's begin with the basics. How's the trade receivable securitization, and how is this space growing in India over the past few years?
Thank you so much, and thank you for this initiative. I'm very happy to be on podcast. In terms of securitization, I think this has always been there for the last 30 odd years. While India part of being the developing economy, we have been trying to develop this market. But in terms of the asset classes, gold loan, home loan, personal loans, these are the kind of asset classes which were known to the investor class,
Right.
as well as to the originator, as well as to the rater. TRS, while it is very prevalent in overseas markets, especially in the developed ones, the impetus to develop this market in India has taken place post the changes in the regulation which came in 21 and few amendments in 22.
Got it.
So TRS basically is the trade receivable securitization, just that the asset class becomes a trade receivable, and this trade receivable is generated by an underlying trade.
Okay.
So very simply put.
Correct. And why do you think it's companies and NBFC choosing this product as trade receivable securitization, and what are the common challenges they face?
Oh, that's a vast question. So I will take bit by bit. So in terms of various players, so as I mentioned, the player is a originator, the rating agency, and the investor itself. Then obviously there is a trustee in between as well. That's the normal thing with most of the securitization transactions. Now in terms of the originator, whosoever wants to have an access to faster liquidity, sitting on a pile of an asset,
Got it.
and part of that asset needs to be churned very quickly, they will obviously want to downsell it.
Okay.
So downsell can happen via various forms, and one form is securitization, and via securitization you can do a paper issuance, which we call as a PTC, and the subscribers come and take it.
Okay.
Now, in terms of the originator, it can be a company, it can be a NBFC as well.
Okay.
But in terms of the regulation that applies to a company,
Mhm.
falls under the SEBI purview. But when it comes to an NBFC, it falls under RBI.
RBI. Got it. Okay. And Manu, if you want to explain, the typical deal involving trade receivable securitization, how does it look like?
Typical deal which
Receivable securitization.
fair enough. So I think very simple example, there are a large supplier of goods,
Mhm.
and there is a large buyer of those goods. And the buyer is a known party who has never defaulted on any sort of operational debt. So this supplier wants to downsell his future receivables, for which he has already done the sale, and the receivables are lying in his books.
Okay.
So he will try to find an investor,
Mhm.
and once an investor is being sought, the investor prepays the money to the seller.
Right.
And there are various structures wherein the seller will put in some equity or some fixed deposit, which will enhance the entire structure, get this instrument rated, and he gets the money upfront. And on the due date, the trustee collects the money from the end buyer.
Okay.
And the transaction closes.
So there's no escrow account involved in this too.
So trustee manages most of the parts. But in terms of how robust the receivables are,
Hmm.
that underpins the entire rating rationale and the quality of the investor and the coupon that has been.
Okay. Good. So you mentioned about regulators, RBI and SEBI. What's your view? How supportive they are in terms of trade receivable securitization deal?
Oh, that's a very tricky question. Regulator is very supportive for us. And as you guys know, we are licensed NBFC as well.
Right.
We have been doing this business of supply chain financing for the last 5 years.
Got it.
So in terms of regulator coming out with new regulations, which is supportive to the market, as well as benefiting the investor,
Right.
both in terms of securing the money they are out of it, as well as ensuring that proper returns are given to these investors on a timely manner. Those kind of overview regulator always had. And I believe Reserve Bank of India and SEBI are one of the best in their business across the global system. So I think regulator has been doing many changes, and the last changes which has come forward.
So you meant, I just like that was my next question. Is there any recent rule made by SEBI or RBI is made it easier or harder for the
Yeah, so I think for the last decade or so, since the 2012 regulation, most of the things were combined into one sort of a circular or the directions by them. Post 2021, the circular was broken down into two parts. One being for the trade assets, other is for the PTCs, and that has really made it much simpler in terms of interpreting the rules, both for the vanilla securitization and for the TRS.
So let's say, Manu, if you want to suggest one change to regulators, what would you suggest to making this market to grow in India? What will be that change?
So from our perspective, I think not to the regulator per se. I think when a country is going through various phases of their journey, we are say about 75, 78-year-old economy per se, and most of our rules are governed by the colonial era. Those changes will take some time, and the current incumbent government is trying to do many things in terms of rolling out policies and rules which can help the capital markets. Most of these transactions are governed by Indian Contract Act, and which is, as we are aware, quite dated. While Companies Act is getting amended and major changes will come into picture. The more robust the underlying agreements are, the interest of the investor as well as of the originator are safeguarded. So, and whatever the regulations the Reserve Bank of India make is kind of lying on the underlying law and order of the country itself. So once those things get changed, RBI obviously will act very fast, and the master directions for these securitization assets will be much more leaner.
So we are saying here we need some robust guidelines.
So guidelines are quite robust, but I think when something goes south, getting the money out is largely dependent on the courts. Courts are governed by the penal laws. So that's where the entire thing on in financial markets work.
That's great. So let's talk about current market status. So what do you think? How empty is the market for the trade receivable securitization in India today?
Oh, hardly there. I think we have not even scratched the tip of an iceberg. I think the potential is huge because in a economy like ours growing at nearly 7%, somebody is selling and somebody is buying. So the receivables are getting created every minute, every second. So the market is huge. But having said that, there's a traditional way the securitization had been established in India, like I said, gold loan, vehicle loan, and all those things. TRS will take some time. But I think the journey has started. And if you say a pool of 100, current is less than 0.001 of the entire securitized assets right now.
But can we still say we are seeing more deals as compared to the past?
Yeah, in nooks and corners, especially with new age companies, the interest is too much. And after all the initiative done by Government of India to make liquidity available to MSMEs, this space is bound.
And based on this, we can say still niche market.
Not very, very niche market.
It's not a common market for you.
Yeah, not a common market. So our job is to educate the various players, be it the investor, be it the originator, and largely the rating agencies.
Got it.
To make them understand how these things work. Trying to find various clauses in the master directions which assist how to do the transactions.
What do you think about demand and supply? Do you think there are enough investors interested in investing in the trade receivable sector?
Yes. So we started this journey. I'm just giving an example of Credible, which is Equivision Financial Service as an NBFC. So we started this journey in December 2022, and that was the first transaction per se in the industry itself. From then till now, we have done close to 3 billion INR of assets under securitization across various transactions. We have worked with 7-8 investors, and happy to state on your platform that in one of the transaction, we enabled even a retail investor to buy this paper by breaking the paper into small parts, less
Okay.
than say about 10 times.
Oh, that's really big.
So those kind of things are happening when it comes to the TRS, which I think is very good for the industry and to an extent to a retail investor as well.
Right. So can we say there is a good supply of quality receivable security in India?
Yes, so I think receivable is nothing but a corporate's ability to pay on time.
Right.
And most of the corporates who are well rated triple B plus and above, I have not seen much of them default. And once those receivables are insured by a trustee, there is a very high chances of these receivables being paid on time. Having said that, there are various ways in which these entire papers can be better credit rated because the originator will put their skin in the game by the way of doing credit enhancements, and that prevents a very high sort of confirmation of less default being done.
That's great. And who really sell these receivables? Like big companies or NBFCs?
Yeah, so the investor could be, I said, the retail investor as well. Along with this, the investor could be a NBFC who is into a supply chain book building, or it could be a company itself and a SEBI who wants to buy these assets and they see value in these assets. Depending on their treasury having some excess money and they want to deploy their money in a high yielding asset, which is this paper.
Okay. So let's talk from the investor point of view now. So what do you think? What are the major risks involved and they should be careful about?
What I believe, wherever there is money, there is risk. But having said that, our job is to mitigate those risks.
Okay.
And one of the major criteria of mitigating is having a good track record. As long as the underlying receivables has some history with the originator.
Right.
And this is governed by the current regulation as well. The investor should always investigate on the past history of these buyer-seller relationships, the kind of underlying transactions, and whatever the skin these originators have put into this period.
So for this, getting the confidence, so I think credit ratings and guarantees are played very important role.
Yeah. The credit enhancement models and the rating agencies which usually ride on these CEs play a very important.
Right. And in terms of AIFs, mutual fund or family offices, are they the investor for or you are looking for?
So I think once these incumbents open their coffers, I think the potential is humongous. But I think family offices, yes, they have shown plenty of interest.
Okay.
But in terms of AIFs and mutual funds, the journey has started. But large ticket size deals are yet to happen.
And the other investors who are investing currently, are they okay with the short term nature of the investment?
Yeah, they're more than happy because they can see a quick turnaround in terms of final maturity of the paper itself. And since these are replenishing in nature, so they can see what receivables are coming in. So they need not wait in terms of a gold loan or a personal loan, which runs for 7-8 years. This is 9 months, 12 months kind of a paper wherein they can see what kind of receivables are coming every month.
Okay.
And the replenishment are happening there.
And they're happy with the yield.
I believe so. So papers that we have shown, I think yields we want to be lower, but I think at present investors are happy.
So without taking any deal name, what was the latest yield you have given in the market?
So the coupon ranges from 10 to 11%.
10 to 11%. Definitely, as compared to bonds, is giving good returns.
Yeah, it is giving good rate. And most of these papers are A rated. So they are top of the top rated. Right. So I think yield as compared to top of the top rated short term self liquidating assets, which is the underlying one. I think it's a very good.
I think it's written with good risk. I mean, there's low risk.
Yeah. So because the paper that we sell, I'll just give an example. We underwrite the borrower as well as the seller asset, right. And then we have a good track record of running the supply chain book ourselves, and then we downsize.
Got it.
So I think the risk, and then we put in our skin in the game as well by putting the equity tranche into the transaction. So I think the risk is minimal.
Okay.
And we have done say about 6 odd transactions, and most of the investors have got their coupon and the principal on time every time.
Okay. So When it comes to innovation, are there new ideas or trends are coming in the market, where we can see new ways of or creating new formats for this product?
Yes, so that's a very interesting question. See, what I mentioned to you, the entire PTC or TRS is relying on trade receivable.
Right.
Right. Now, this trade receivable can be interpreted in a different way by different uh, investor. Now, we are largely on the receivable side of the business. The payable side of business is huge,
Right.
but somebody's payable can be somebody's receivable. So projecting it in a structure which is completely compliant with the underlying regulation, that's sometimes becomes a challenge. But as long as the transaction is able to tick box most of the regulatory requirement, it is good. But I think once some bit of clarity comes on the trade payable side, I think the volumes will grow much.
Okay. And is there technology or blockchain is being used for this?
No, these are big words, but no, it's very traditional business. And while overseas, the portfolio sell downs in a certain shape and form, dependent on the respective countries, is being done. In India, there's no platform per se for TRS as well. But hopefully, we being a fintech, we are trying to build some sort of technology around it so that a platform is available akin to a trades platform. And since the trades volume, sorry, I did not touch on that point. The trades volume is growing tremendously. And whatever is happening on trades is nothing but creating a receivable pool itself. And once a secondary market is open for those pools, which is currently not available, I think TRS would be the next game changer for any trade receivable transaction.
Yeah. Great. So when it comes to investor, um, there are government agencies and public sector companies. They are very active in the bond market
Yes.
because of what the rules they have. So are they helping to growing this market?
Not yet. Maybe from our perspective, the ticket sizes have not been that huge because supply chain market in terms of overall assets in the industry hovers around 7 to 10% itself.
Okay.
Right. So now creating a secondary market for the 7 to 10% of the entire credit market in the industry, I think will take some time. And showcasing it to larger treasuries of PSUs, I think another half a decade will be taken for this.
And what do you think, like, as per your understanding, like institution like SIFB or NAFID, what role they can play to grow this market or support this market?
Okay, bye lads. From the SIDBI perspective, I think SIDBI's main crux is to support development. And I think SIDBI has done lending to us as well. So from SIDBI perspective, I think they can ideate on creating a platform for this, similar to the lines of trades, wherein on a very regular basis, a bidding for these assets can be there, so that both the investor as well as the originator can have a higher coupon and a better return.
And when it comes to future outlook, what do you think? How big can this market become in the next few years?
Oh, like I said, we are 0.001%
Yeah, that's
of
very-
the I think even if we hit 1% in 5 years, I think
that could be a good sign for growing this market.
yeah, tremendous.
And like, give me 2 to 3 important steps are needed to help this market to grow this market in future.
Yes. So one thing is, see, trade asset generally is something which is unsecured of in nature, right? And these are short tenor, so the replenishment has to happen very quickly. Now, in terms of help required, is in terms of whenever a large financial institution is building a trade asset on their book, they should have a very strong RW benefit.
Okay.
The more RW benefit is given to a large financial institution, their tendency to build higher trade asset book would be much more. Once the book is more, the need for downselling is much higher. So it's a cyclic and a domino effect which will keep on happening.
Okay.
So from the regulator perspective, the way it is there in Basel 3 now, in terms of RW benefit for trade receivables, I think that thing should be provided to Indian PSU banks and private sector banks for managing better capital adequacy.
Okay, great. And do you think if you if you compare with the global, so do you think India will follow global trends like linking trade receivable to ESG goals?
I think India has always followed best practices across the globe. I mean, point in condition is trades. So I think French government experimented with it. Then the idea came into India. So I think it's quite natural that any good practice which has given good results for overseas market
Right.
in their respective country has to come to India.
Great. And very last, and you clear, I think, all the doubts we have for our investors and audience we have in the industry. But as it's a new play, new product for everyone. When it comes to players, and you are the pioneer in this segment also.
Yeah.
So what do you think? Like, what is your role developing as a credible to growing this market as compared to others, or what they can do more to grow this market as a industry or
Yeah.
together?
So I think one of the benefit that we have setting in the financial capital in India, and this industry is very, very small. Be it
Right.
the players like a trustee, players like the rating agencies, players like the people like you who really helps us in putting a word out in the industry, what new is happening, what new asset class is getting built. But in terms of getting the underlying asset created and getting an invoice discounting or a factoring as a product, having a good solid run, I think a lot of a few changes in the Indian Contract Act will really help.
Okay.
So that is one of the asks that we endeavor should come very quickly. Because whenever a contractual obligation is created by a receiver of good for making a payment on the due date, those contractual obligation when goes to court doesn't get a result on a very quicker basis, and that's where people are very happy having a position of a financial creditor than as a operational creditor.
Okay.
So those things are there, but I think the way we are going right now, the things are improving, especially with our honorable finance minister coming out with laws that MSMEs are to be paid within 45 days.
Right.
So those kind of regulations really helps this kind of TRS structures.
So if you want to give one last suggestions or some guidance to the investor point of view, to the investors, what will be that?
Oh, that's a big hat to bear. So I think the only request I can make to investors who have never invested in such kind of asset class, I think one request would be please be open to such ideas, and this is a short and a replenishing and with multiple anchors and multiple sellers with the transaction is being done. So there are too many parties involved, low ticket size, invoices are being tracked. So it's one of the safest assets in terms of building a quicker hook as well as
Got it.
getting a very high safe coupon for such transactions.
That's amazing. Thank you so much.
Thank
It
you
was
so
a
much for
really
having me.
great discussion with you, and I think it will definitely help our audience or investor to understand what is TRS.
Sure.
Thank you.
Be happy to be part of this discussion, and hopefully we might have some outreach
Definitely.
to right people.
Definitely. Thank you so much, man.
Thank you.
Thank you so much.